All right. We should be recording. Good morning. It's just about 6:30 a.m. on Wall Street, 3 hours before the open, 2 hours before the big news event of the day or of the week or really of the month. Very cool. So welcome to Quant Box Live, where we get our global macro on. Our goal is to uncover the best fundamental opportunities. See, Quant Box uses AI to gather, organize, and analyze macroeconomic data from all around the world, pulling directly out of central banks and other types of databases that are both private and public, and then does comparative analysis of those assets of the macroeconomic data, and then creates a scorecard, and then organizes everything in things that should be or may be bullish and things that should be or may be bearish and everything else that's neutral. And then it gathers short term data like sentiment and technical trends and then combines everything. Excuse me. But it also looks at seasonality like the 5-year trend and the 20-year trend. It looks at the commitment of traders report and organizes the stock of capital and the flow of institutional investing. It looks at central banks' projections 18 months into the future. It uncovers the underlying intrinsic trend so you know whether you should let your winners run or whether shooting at rabbits is the more appropriate strategy. Oh my gosh. Unbelievable, amazing. So, if you're watching this on YouTube, think about it this way. It's $80 a month and you can start trading like a professional institutional hedge fund that has billions of dollars under management and an entire staff of quants. You can do it for $80 a month, or you can stay amateur. You choose. But imagine you could organize your thoughts this way. Wouldn't that be cool? Yeah, it would be cool. It is cool. So, anyway, swing on by, test it out for $8. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus in the long term, and never risk money you cannot afford to lose. Just want to show you. I guess two things. I still haven't had the time to raise the price on this. The price is going up. Okay. This works. Everything works. You actually get a text message now. I got one. I got my first text message. Yeah. So what happens is there's a couple of things. Twice a day at pre-London, 6 hours ago, you get an email and it shows you all the things that have changed on QuantBox while you were not looking. And then pre-New York, so this one came out a couple 42 minutes ago, it gives you another update. Pre-New York, pre-London, pre-New York. So you're always ready. You're this way you don't even have to log in and go through dozens of pages to try to figure out what happened. Yeah, it does it there. It also reads and writes you a COT report, commitment or traders report. So on the weekend, without logging into QuantBox, you can actually look at the email and it just writes a little report for you. Here's everything that's gone bullish. Here's everything that's gone bearish. And then lastly, you get a text message on your phone when fundamental trade opportunities present themselves. And it pings you and says, wow, this is going bullish, or wow, this is going bearish. And it actually tells you why. So you've been getting a lot of text emails or text messages about oil. Yeah. So you were on it. So, anyways, it's super cool. It super works. It's super amazing. Super duper. You should try it. It's an upgrade, by the way. All right. Let's. The other thing I wanted to show you is I've organized. Oh, I haven't activated March. It's funny. You create these things and then you have to turn them on. Like, why would I not want that turned on? Let me fix that right now. March. Yeah, sure enough. Hang on. publish. We'll refresh this. There we go. So here's the April. March has all been organized. February, January. Okay. The other thing I noticed while doing that is QuantBox is definitely 1 year old now. Thank you for helping me build an amazing tool. Okay. Thank you for that. All right. Ba, 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 ba. Ba, ba, bum. Do, 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 do. All right. So remember, this was higher yesterday. The market's not open right now. That's why there's no change. But the change since yesterday, this was, I think, 4.4 something on the way to 4.5. And I'm like, I hope it stays below 4.5. And, so it's come down a little bit, which means investors are starting to buy the dip in the treasury market, which is nice. Maybe there's a thought that the Fed will actually still cut 3 times this year, and you could be watching the Fed Watch tool and seeing if they're pricing in cuts. They've been pricing out cuts. Maybe they're pricing in cuts again, and that's the thing. The ebb and flow is crazy. That's why it's better that you just make your own decision. But anyways, that's a slight improvement. I'm okay with that. Yesterday, we talked a lot about oil maybe being in a position to be a buy a dip scenario. I hit that hard. Cool. Well, that might be interesting. Okay. It's maybe recovering. The big decision you need to make is that, will oil go to 100, 120? That's what you need to decide. And therefore, if you want to buy a dip or not. The other thing about oil, oil is the number one input cost for gasoline is the price of raw crude that refineries have to purchase to make gasoline. And so oil has been going up. At what point does higher gasoline prices start to appear in CPI? See, CPI is later today. And will that start pulling up headline? It doesn't pull up core because core, you remove it. But we might be in a scenario pretty soon, if not this month soon, where headline CPI is going up. And all right, well, that's inflationary is all I'm saying, because this was 65. It's now 85 on the way to 125. Well, maybe. Okay. Gold still elevated. S&P 500 hanging in there. Today is going to be a market moving day. Euro still just hanging around. It's just so funny. Just stagnant, right? Stagnant. And Bitcoin, hey, look at that. A down day for Bitcoin. I think I'm going to start sending out my Bitcoin invoices today. Pay me today. Pay me today. So we'll see. So we can look into this still. Oil still very bullish. USD CAD still very bullish. USD yen bullish. Okay. Look at the price, right? Look at that. So we'll you might want to pay attention to some of these to the upside. Pound Aussie. Okay. Bearish. Now I believe TRADARS sent me a message to watch for that, but I thought it was up today according to TRADARS. Do I have that? That might have been last night. So that like let's say short term up and long term down, right? Let's see if I can find this up. I get too many emails is my problem. Yeah. Yeah. This is the premium plus. This is the plus premium to plus at TRADARS. You get this alert when it sees patterns on multiple time frames. And yeah, pound Aussie up for today happened earlier. So anyways, it'd be interesting if this goes up today and down tomorrow. That's how you'd look at that. Take a look at the risk gauges, thin markets, everybody's waiting for CPI. So you see that here. Um, we got a nice little -3. Okay, nice little -3. It's okay bearish. So, often what you're doing is buying dollar and buying yen, but we got a lot of interesting forces going on right now against those assets. Or let's say not against, but on top of, or, those types of assets. So we'll see if they end up correlating. If you look on the monthly basis, VIX is kind of flat. Okay. S&P 500 is up slightly for the month. Okay. Just slightly. It's hanging in there. Gold is up quite a bit. And typically that's negative, because the reason I score that negative is somebody's using it to head inflation, and inflation is bad. Okay. Yield on the 10-year T note is up. That's bad. That means the treasury market is falling. Dollar is strong over the month. And that's not good, because that's usually risk off. People getting out of risky assets and going to cash. Well, that's not good. And yen is weak, very weak. Well, that's great. Scored all up, and there's no correlation. There's no long-term underlying interest rate trend, and that's risk. Therefore, you may not be able to let your winners run. So if you have an opportunity to make 50 to 100 pips, you take it. Normally you would hold. This one, you're like, you don't hold them, you fold them. All right. Take a look at the scatter plot. Holy smokes, Bitcoin's way down. Like I said, I'll probably send out my invoices today. Pay me in Bitcoin, because maybe tomorrow it's up. Okay, so we got to get rid of that outlier. That's definitely an outlier. Okay, and now what do we see here? Nothing really consistent, huh? Okay. All right. Well, we do see, if we just look at the indices, okay, I see FTSE and, right. So the UK and Germany are doing, well, all right today. S&P 500, NASI, and Dow. Well, the market's not open yet, so there's just a slight bid on futures, right? So okay, basically flat. But maybe this is a sign that the markets are going to be up today. If Europe is up, maybe we're up. Excuse me. Look at majors. Dollar weak, dollar weak, dollar weak, dollar strong, dollar strong, dollar weak. Wow. Well, dollar strong in this case. So what do we know from this? Well, many of these key assets show dollar weakness, but Aussie dollar is down. Therefore, Aussie is weaker than the dollar, weaker than euro, weaker than pound, weaker than Kiwi. Maybe you should be looking at selling Aussie. Excuse me. Maybe you don't like Aussie today, huh? Okay. Swissy is weak, yen is weak. Remember, that's really set by central banking policy, but by weak we mean slightly better than flat. So I wouldn't make a big deal out of that yet. Looking at some cross pairs, what do we see with Aussie? Aussie's weaker than CAD. Aussie's weaker than Kiwi. Okay. So, okay. Aussie and Swissy are flat. Aussie and yen are flat. So these are all weak. Okay. You see that? Kiwi is strong. 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 Sorry. It's this ghee I drink in the morning. It sticks to my throat. It's basically butter that I put in my coffee. So, anyways, sorry. Me. So, anyways, do you think that Kiwi is strong possibly because of the news event yesterday? You think it's random? A random walk down the global Wall Street? Yeah. So you were prepped for that? Okay. They did not raise interest rates. They did not cut interest rates. Sam, I am. They did not. They will not. They did not cut. They did not rock. They did not. Sorry, I read. I read a lot of children's books to my kids when they were little, so everything goes back to those children's books. All right, so today, hey, do you want to get together and handle this? Yeah, you bet. So let's see what's printed here. Headline month over month was 0.4. This should be 0.3. That makes sense. Although I think the risk is this goes, it comes out 0.4 again. But yes, this is what I've been seeing the market expect. So that's right. Year over year, okay, the headline going up. Remember, the Fed wants that to go down to something. 2.9 would be super great. Remember, do you know what Europe is? 2.4. Hmm. How do I know that so quickly? Well, I spent 3 hours yesterday reading global economic reports directly out of the government agencies around the world, including Canada and Australia. I don't think New Zealand got on the list. The United States, China, Japan, um, probably UK and probably Euro. Yeah. So anyway, so yeah, we know these things, right? So the United States needs to get this quite a bit lower, and it going up might be considered a problem. Well, the last meeting, the last Fed decision had a follow up press conference. And Jay Powell said they see all of this. They see that where the rate of change to the downside is falling, but it's not 10, it's three and a quarter, right? And they understand why it's slowing down or finding, let's say, a stable price or a stable rate, because the things that are easily deflatable, right, inflation wise, have been deflated. And now there's going to be some choppiness. Now the more difficult things need to be deflated, things like housing and rent and wages. One of the biggest contributors across multiple versions of this industry is insurance, car insurance, health insurance, reinsurance, anything insurance. um, has gone up dramatically. If you haven't seen it yet, you will get a car insurance renewal, for example. When you re up for car insurance this year, it might be 30% more. Like, not a little bit more, a lot more, right? So imagine, your bill goes from 700 a year to 1,000 a year. You're like, oh yeah, that's legit. But imagine it's on everything. The insurance on your skyscraper goes up. Okay, so there's real inflation going on. So the Fed is watching that, and they may know it, but they're like, okay, but that's not something we can fix. So why should we worry about it? You see? So what they were saying is, they're basically looking through that. What I'm trying to say is even if this goes up, if the Fed has already wink, wink, nudge, nudge determined they're going to cut three times, they're going to cut three times. And this ain't going to stop them if it comes out 3.4. Now, the market today will probably freak out and say, that's it. Now the Fed's not going to cut at all this year. But that's for people thinking and not people listening. So if the Fed has decided the only way they can handle the situation this year, because it's an election year, is to set a schedule starting well before the political election. So if they're going to cut, they're going to cut. And I think Fed said, Jay Powell said it. We're going to do it three times. And what I said is cut, pause, cut, pause, cut. There's your three over the next 6 months. And that's cut now, cut before the election, cut after the election. I said that when in the special event that everybody paid $4.44 for. I broke out that schedule months and months ago because you don't want to cut right before the election. It'll look political. So there's only two choices that the Fed has. And really, if we're going to debate this, they have to cut before that. If they're going to cut before the election. So let's say they're going to cut September, then they have to cut June and pause in the middle. Or they don't cut June, they don't cut Sep, the election happens and then they cut in December. So those are they either cut three or they cut one. That's what you need to decide. Now, what I do is I use QuantBox, and QuantBox just tells me what they've told me. They meaning the Fed. So I don't have a debate. It's three. Why? Well, that's what the Fed told me. Like, that's it. So even if this comes out red hot, be careful. I think the market's going to freak out and the Fed's going to do whatever they determined they were going to do anyways. Okay. So it's like, don't overthink it, but be ready for volatility you may not like. And then it'll swing back the other way when reality sinks in, right? Later today, another interest rate decision. So are you going to be trading CAD? Everyone's going to be looking at the US dollar. And Canada will come out and everyone will be looking the wrong way. I reviewed the Canadian economic data yesterday, and well, it's not good. So, anyways, I feel bad. And then later, I think the real news today, if you will. So, like, if the Fed's going to do whatever they're going to do, then this is actually irrelevant. We only care about this in our analysis of what we think the Fed will do because of this. But if the Fed's already got a plan, they can't tell us. But if they basically have already had a secret handshake and they're like, let's cut in June, then this is irrelevant. They're going to cut in June no matter what happens. And that's kind of what Jay Powell said. So then the real news is going to be here, and you're going to actually have to read this. I know, I'm sorry. I will read it next week on the 16th. But you can read it on your own. What are you reading for? The secret handshake. Have they already decided that it's June, no matter what? Like, have they decided the only way to handle this year with the election is cut three times? June, September, December. And that's what you want to look in there. You're going to have, they're not going to tell you. Right? Don't look for the sentence where we're like, we're secretly going to, agree on this ahead of time. No, they're not going to tell you that these future meetings are pointless and they've already decided. So meeting and looking at new data would be irrelevant. Like, they're not going to tell you they're not actually data dependent. So you're going to have to look through it and, look beyond the words and try to figure it out. You're like, Wayne, that's hard. Uh-huh. Yeah. Yeah. Well, This Forex thing is interesting, but not easy. All right, what else going on in the world? Well, tomorrow we got a lot of news. Okay. And then Friday. Okay. So anyway, so it's a good week. Okay. Right. The big one tomorrow is the ECB. And my thought is if the ECB is talking to the Fed, the ECB might go first and cut. Once again, because I read the data, I could say, well, they can cut because they're already at 2.4. The Fed is at 3.2 going up to 3.4. 3.4. Okay. A lot more inflation. A lot more. Europe is cheap compared to the United States. Okay. Yeah. Okay. Cool. What should we do? Just kind of, I forgot to do this the other day. Yeah, Bitcoin, the biggest winner. Gold's still doing well. So are we buying dips on gold? Well, you know what? Let's talk about this. This is good that I did this. I would not be shocked at all if headline inflation comes up higher. Okay. Instead of 0.3, it comes out 0.4. I'm not saying it will, but it would not shock me in the slightest. And that headline, like I said, would probably be an increase in gasoline. Okay. And then what about year over year? Maybe it does go from 3.2 to 3.3 or 3.4. Well, that's also up in inflation, right? Year over year and possibly headline month over month. Core will do okay. And the Fed looks at core, but let's talk about the market. It comes out higher. Inflation in the United States by various measures is higher. What is the market going to do? Buy gold. Okay. Okay. It's neutral now, but we're thinking through it. Okay. Inflation goes from a 0 to 1. That still doesn't get a positive score. Institutions, right? 79% of their volume, their stock of gold is bullish. Retail's long too, which is funny. So we hedge against them or trade against them. But right now, everything's long. That's seen in the COT data. Okay. Seasonality. This is the right time to be long seasonally. And then you want to look at this. The way you look at this, and maybe let's move out of that to let's go to the price forecasting tool and pop that in gold. It's just easier to see, right? Because it's big. The way you want to read this is if you are a bull and you believe inflation is going to remain high, and even today shows signs of increasing. It's not just it's high, but it's going up again. If you believe they put a man on a moon. Hang on, I'm getting my drawing tool. All right. So I have to kill it before I start it. I know it's weird. All right. Almost there. There we go. All right. So here's how you use this information. You're already a bull. You already believe through your analysis, like me, I've done my analysis, so I have this belief. Would not be shocked at all if headline and year over year inflation goes higher. In that scenario, if that occurs, it would make sense that goes up. That's how I've built the model in QuantBox. That's why I score gold going up as negative, because we don't want higher inflation. Okay. So how does that work on this tool? You have the up, which we've done. So we're right here. So let's do that. Let's do it this way. Okay. From this point, okay, we have up. That's where, right, the last daily close was. So what do we do now in the future? Okay. That's how you use this tool. You're buying a dip and it could dip, okay, or it just pops, okay. But the thing is, you want to be in earlier, like you've seen this for days and days, weeks, in fact. So if you are going to remain a bull, these are the future worst case scenarios, that gold has a dip but then still rises. But you're buying dips, so you're just using that, right? You're just kind of using that as a, you know, right? So you'd go into the market today or even last night, like day trading, and say, I'm interested in buying a dip at support. Okay, cool. Okay, that's it. So that might be your best market mover today, watching gold. And pretty flat here, huh? Mhm. Wonder why that's three something. Doesn't quite line up. Interesting. Mhm. Labor market is strong. Interest rates are high. Inflation is high and going up, but the economy is doing good. Technically, S&P 500 is still bullish. Seasonally, this is typically a time of the year you're buying the stock market. I love April, May, June. 3 out of 4. Yeah. I was thinking, I was going to say 9 times out of 10. I'm like, wait, I should be able to quantify this. 75% of the time, and I know this because it's part of the political cycle, 75% of the time I'm long this time of year, right? So 75% of the time I'm long every time. And so I see that seasonality and I'm like, whoa, we're toppish and flat, but seasonality is very bullish. I'm like, uh-huh. No, I get that. I do. Retail's long and institutional investors are nervous. Look at this. Retail's long. Institutional investors are already getting out or hedging. That's where that VIX comes in, by the way. An increase in the VIX, all that's telling you is an increase in hedging, which you don't hedge if you're confident. So, anyways, interesting, right? You can read all this data. We have all this data. Isn't that fantastic? GDP 3.4, inflation 3.2, unemployment 3.8, interest rates 5. So the Fed in their discussions are trying to figure out what is the neutral rate of inflation, and if they say it's 3, then they're going to decide, well, we can have interest rates, let's say 1.25% above whatever we think inflation is. So let's say they say inflation's 3. We're not down to 2, but we're down to 3. Then they can cut interest rates this year and next year all the way down to 4.25 and still be restrictive. But you don't need to be 5.25 or 5.5. Well, that's a lot of rate cuts. And that's why you read those meeting minutes later today. Try to, what are they discussing? How do they feel? What do they feel the neutral rate is? Okay. So, anyways, I think that's enough. We got to get going because we have a busy morning over at Forex. Today. We are going to cover that CPI data. And it is a doozy. And remember, ultimately, I think wink, wink, nudge, nudge, the Fed doesn't even care. But we care because the rest of the market cares. And most of the market is going to probably freak out. And, well, you need to protect yourself from people freaking out. Right. So I don't think it'll be boring. And, it's a blessing. May your life be interesting. Well, you have an interesting life. So, congratulations. Enjoy it, but you have to survive it. Peace on earth, right? And very few people survive life, right? So, peace on earth. May the pips be with you. May your profits be above average. I'll see you around. Cheers.